Do you want to know what's one of the biggest secrets to profitable trading? It is understanding order flow. If you are trading without knowing where the market's momentum is heading, you are risking being on the wrong side of the market, and that can cost you big time. In this video, I'm showing you how to read and apply order flow to your trading, so you can start trading with confidence and win more trades more consistently. So if that is something that you are struggling with, this video is one you want to watch. Because in this video, I'm going to share with you an easy 4-step process on how you can master order flow. I'm going to run over a complete trading strategy that I used for decades in order to pull profits out of the market. I'm going to share with you how to effectively manage your trades, and I'm also going to share with you in-depth examples so that you can apply this strategy correctly. So if that is something that sounds interesting to you, stick around and I'll see you in the video. So what is the first step that we have to do? The very first thing that we have to do is we have to ask ourselves, where has the market been? If a market has had a bullish run and we look at price action here, we open our charts and we see this impulse leg. We ask ourselves, where has the market been? This market has potentially been to a bullish fair value gap, or if this is higher, it can be an order block. Whatever the case is, this market has traded into a bullish point of interest. And what happened before that point of interest? This market had a very bullish run. So where has the market been? The market has traded into a bullish point of interest, creating a new impulse leg. So what can we expect? We can expect a potential retracement into an order block or a fair value gap, and then a continuation of this leg of price. So we should always ask ourselves, when determining what is the order flow, is where has the market been? And that is going to lead us into step number 2, which is where can the market potentially go? So step number 2, where is the market going? Now, I shared with the previous step that if we are in a bullish trend or bullish order flow, we can see that this market has been to a bullish fair value gap. We have created a breaker structure. This market has displaced up, leaving a fair value gap, retraced back into our internal range liquidity. Now, where's the market going? We go from internal to external. So because I know this market has been and traded into a bullish fair value gap with a bullish trend, where's the market going? The market is going to this high. That is when I can go ahead and open the charts and I can see and run through step 1, and I can confidently say that this market is running to seek out external liquidity. In the same example, just a bearish version, where has this market been? If we trade in, where has this market been? This market has potentially traded into either an order block or a bearish fair value gap. Now, where's this market going? Well, based on this leg of price, based on this order flow and trend, we can clearly confidently say that this market is seeking external range liquidity, because we have traded into internal range liquidity and we have traded into a point of interest. So we can confidently say that this market is seeking out external range liquidity. So we can capitalize on that move of price action over there. Are you tired of not seeing the results from your trading that you deserve? Welcome to a trading mentorship that's actually different. This program isn't just theory, fluff, or hindsight analysis. This is real live trading in action. If you join my mentorship program, where I don't just teach you strategies, I show you exactly how to apply them by trading live in front of you. We can watch me call prices live, analyze the market on a daily basis, again live, and execute trades in real time. No hidden tricks, no post-trade explanations, just raw, real experience of a successful trader. In this program, you'll gain access to successful strategies that's tailored for consistent profitability that has been backed and proven and tested over decades of experience. A step-by-step guide on mastering order flow momentum, precision entries. I can show you exactly how the markets book. You have live sessions where you'll see me trade in front of your very eyes, helping you build the confidence that you need to do it yourself. And other benefits include the live trading that I've mentioned, real-time market analysis, an in-depth trading course, direct support. If you need anything, you have direct access to me to answer every single question that you might have. You get access to a professional trading journal that I've taken years to build and design. You have personalized one-on-one coaching. So if you are struggling with anything specific, you can ask me and we can jump on a call and I will help you with a smile. And you also have full access to course updates. If you are still on the fence, this program guarantees real success. And just see what our members are saying. Just take a look at the overwhelmingly positive responses that people are busy getting out of this mentorship program. So if you are tired of not becoming a consistently profitable trader, this is something that you shouldn't sleep on. You can be my next success story. This is easier than you think. So, step number 3. What is going to be our point of interest? Well, in this example, in this model of trading, I want you to only focus on opposing closed candles or an order block. So, if you're not familiar with order blocks, I do have an in-depth video on order blocks explaining that on my channel. But quickly, in a nutshell, an order block is a run of opposing candles or consecutive opposing candles that takes out liquidity. So if we have a bearish move where we take out liquidity and we close above this, we have obviously consecutive down close candles that goes down lower, sweeping liquidity. As soon as we close above the opening price of these down close candles, that is known as a change in the state of delivery. That is the formation of our order block. But I do explain everything in depth in that video. And then order blocks can also form in a run of price. So we have this leg of price is bullish candles. We have bullish candles. And here in this pullback, we've got bearish candles. Here I've drawn that out for you. We have big impulsive moves in price, and we have little pullbacks in this overall bigger move of price action. We have little pullbacks. These opposing candles form a valid order block as soon as we close above them. They will be our points of interest. So we are going to go ahead and mark out our opposing candles. Here we have opposing candles as well. And I want you to mark it from body to body. If the wick is down here, I don't care about that. If the wick is up here, I want you to only mark the body to the body. That is what I want you to focus on. So our point of interest will be, let me just move this up. Our point of interest is going to be these order blocks, and how do we frame a trade idea off of that? We are going to wait for the market to create an order block, first of all, and close above the opening price of these down close candles. That forms our order block. And then we are going to wait for this market to go ahead and trade back into that order block. That can act as a valid point of interest. It can also act as a demand zone or a supply zone, depending on the direction of the market. And that is where we want to start framing our trades. Now, step number 4. How do we actually get involved? How do we get involved in this trade? You have learned by now how to spot market direction, how to spot valid points of interest, and now what can we expect after the market trades into our point of interest. So now that you've learned that, how do we actually get involved? So I want you to wait for the following. First of all, I want you to go to the 4-hour time frame. This higher time frame analysis is going to take place in the 4-hour time frame. Then this lower time frame entry is going to take place on the 15-minute entry time frame. Now, what do I want you to do? I want you to mark out the order blocks. Here we have that valid order block. Let's go up. Here we have that valid order block, and I want you to wait for price action. Do this on the 4-hour time frame, and then you drop to the 15-minute time frame. So everything to the right of this horizontal line will be the 15-minute time frame. We drop to the 15-minute time frame and we wait for price action to trade into our higher time frame point of interest. Only after price action trades into our higher time frame point of interest do I want you to look for this setup. This isn't a pattern trading setup because we have built a narrative. This ICT or SMC patterns is just a pattern without a narrative. We have built a narrative now, and we have identified a supply/demand zone that we can expect prices to rally from. Now we are waiting for our setup. First of all, I want you to wait for a liquidity sweep, and you will see this when I go to the chart examples. We wait for a liquidity sweep, and then I want you to wait for a market structure shift. Market structure shift. You can use a change in state of delivery here as well, but according to my experience, I have found a market structure shift to be higher probability. Then liquidity sweep, market structure shift, and then I want to look for a fair value gap in this leg of price that has taken out liquidity. We have rated liquidity, shifted structure. I want to wait for a fair value gap to form in this leg of price. And that is where you take your position. And you can target a 2R trade. This is a bullish example. Let's move over to a bearish example. In a bearish example, we are waiting for bearish order flow to take place. And then I want you to go ahead and I want you to mark out your order block on the 4-hour time frame. Remember, everything here is on the 4-hour. Everything here is on the 15-minute time frame. Now that price action is traded back into your 4-hour order block, that is when I want you to start looking for our entry criteria. Our entry criteria is a valid sweep of a high, and then I want to see a structure shift down here. Then in this displacement leg, I want to wait for a fair value gap to form, and that fair value gap, that is where I want you to take your trade. Stops above the high, and I want you to target a 2R. That is how we get involved. But because this model is based on order flow, the potential probability of catching a big trend is very high. So I want you to take off a partial at 2R and leave a very small partial running until you hit -4 standard deviation when measuring this move. But that can be a little bit more complex for new traders. So if that's you, please do not worry. That is not necessary. Just take your full partial at -2R. I have been in this game for more than a decade, and I take all of my profit off at 2R. So in this example, what can we see? What is step one? Where has the market been? Well, this market has been all the way up here, and we have dropped rather aggressively down lower. Now, if we look here, we can see that we have an up close candle that got closed below, giving me a valid bullish order block. So we have a valid bullish order block. Now what do we have? Now I can ask myself, where is this market going? In this leg of price, we can see that we do have this fair value gap that lines up with this order block. So I can expect a move into internal range liquidity and then seek out external liquidity again below this swing low. I can expect that to happen. So how do I get involved? We have marked out our bullish order block. Remember, I want you to mark out order blocks. So we have this up close candle as our order block. Now I drop to the 15-minute time frame. Remember, we have already decided that this market is in a downtrend. Now we can wait for this market to trade back into this order block and then wait for a potential setup. Zooming in, let's wait and see what happens. Do I have a touch yet? There we go. Here we can see this market touches our order block. So now we can start looking for a trade. A market structure shift will happen when we close below this up close candle, unless we trade higher. So, do we trade higher? Yes, we do. So our market structure shift point moves to this low because this is the swing low that created this swing high. We are just waiting for price action to close through that low, which we get over there. And then you can either enter on a fair value gap. Let's see if we do have a fair value gap. Here we do not have a fair value gap. So if you don't have a fair value gap, personally, I would not take the trade, but you can take the trade on the retest of the order block. This up close candles will be your order block. You can do that. I'm just showing you this example to see how it's going to play out. Personally, I do not do that. If there's no fair value gap present, I do not take a trade. In this example, it works out. And so that is something that you can add to your backtesting. Here we have our next example, and we can clearly see that this market is in a very strong bearish trend. So we can also see that how are we going to frame our point of interest? Remember, I wanted to use order blocks on the 4-hour time frame. Here we have consecutive up close candles that takes out liquidity that we close through. The reason why I don't take this low as my order block is because we have bearish candles in between this. Here we have 2 consecutive up close candles. So as soon as we close through this opening price, that will be my order block. Now we can drop to the 15-minute time frame and we can wait for price action to trade into this 4-hour order block. Now we are just waiting for price action to go ahead and trade into this order block. What can we see? Price action trades into the order block. So at the moment, this moment in time, my market structure shift point will be when we close below this swing low. Now we just wait for price action to do its thing. What happens? This market goes ahead and closes below, shifting structure to the downside again. Now we have traded from external into internal range liquidity on the 4-hour time frame. Now we're seeking external range again. We have received our market structure shift. Here we have a fair value gap. And the reason why I don't use this gap is because this gap has been mitigated over here. So this is my fair value gap. That is where I would like to see the market retest. You can go stops above the most recent high, or you can be safe and place your stop loss above this swing high. Remember what I said? We can target a straightforward 2R, or you can measure your standard deviations and you can take a full position off at negative 4R. Let's see how this trade plays out. We get a tap into our fair value gap, so let's see how this runs. Eventually we do go down and we do hit 2R. So now for interest's sake, we have taken partials. Stop loss has been moved to break even. Let's see if this market can hit negative 4R. Let's see what happens. Just going to go to the hourly time frame. And we reverse. That is why I only take I take everything off at 2R, because negative 4 standard deviation doesn't always get hit. So take the majority of your trade off at negative 2R, or you can also target negative 2 standard deviation. That is up to you to decide. Over here we have a bullish example on gold, and so what can you see in this chart? A lot of people will say this is consolidation, but I do not believe that that is true. Here we can see, if we look here, we can see that we sweep liquidity and we have changed the state of delivery by closing above these 2 consecutive down close candles. Now, because we have received a change in the state of delivery, my bias will be bullish. We can also see that we have displaced above this low resistance liquidity. We have displaced and left fair value gaps. And this market is busy seeking buy-side liquidity above these highs. We do retrace back into this order block and we are busy respecting it. Price action then runs higher from where? Price action runs higher from the order block and we go ahead and we change delivery again. creating a new valid order block. Now what happens? Now my bias is bullish because we have this condition met over here, and we have this condition met over here, and we have received our second change in state of delivery. So price action trades back into what? A valid point of interest, an opposing candle in a bullish run. This is also known as an order block. Then we drop to the 15-minute time frame. Remember, my overall draw on liquidity is going to be this 4-hour swing high. That is going to be my overall draw on liquidity. So now we are just waiting for the market to give us our entry signature. We play price forward. We wait for our valid market structure shift. What do we have here? We have a candle that sweeps liquidity. As soon as we close above this swing high, that becomes my valid market structure shift. Let's wait for that to happen. Do we get it? And there we do, we get it. Now we don't have a fair value gap. Here we have a fair value gap that forms. So we can take our entry on the retest of this fair value gap. Stop loss goes below the low. And you can target this, but look at the reward to risk. So because that is the case, I'm going to move my stop loss up a little bit until I hit 2R. Because I don't see prices, I see this as low hanging fruit. And I don't know how price is going to react above that. So I'm playing it safe and I'm taking full TP at this swing high. Let's see what happens. We get a tap into our fair value gap. This market also almost runs this bullish order block. Let's see if we do get a tap of that order block. Price action fails to hit the order block, but then ultimately runs higher from our fair value gap. And if you were to hold a small partial until -4 standard deviation is hit, you would have banked a total of 4.42R on this trade. Guys, I hope you can see how powerful this method of trading is. This works very well if you have a full-time job and you are trying to grow your capital with trading. As always, I hope you enjoyed today's video and I hope you learned a lot of new things. If you did, let me know in the comments below and I'll be happy to reply to your comments. If you have questions, let me know down below and I will reply to your questions. If you are looking to trade live with me and have me help you, guide you on your trading journey and guarantee your trading profitability in a month, I do recommend checking out the mentorship program. Links will be in the description below. I hope you have an amazing rest of your week and I'll see you guys in the next video.